All right, man. A point of contention:
What's up?
index funds versus rental income.
Okay, I'll play. You know, rental income is a really successful thing, especially when you've already paid off your mortgage. And you can start off with a home that's about a good 60 to 70,000. Pay that off over time, and get somebody in there, and it's a good passive income for you. As far as the index fund, it doesn't seem like it's that lucrative to me. Where you do have great returns, but how would you equate or make more money off of that than rental?
I will say this, right? I think you have more potential to make money with rental properties.
Okay.
But the reason we're comparing that is not because of which one will make you more money. Because, if you're going to do rental properties full time, that's all you do, then yeah, I mean, I say do your rental properties full time, still get some index funds on the side, but yeah, focus on that. But if it's a side gig for like me or you, like we don't have full time to spend doing
Yeah.
anything else. We have our own personal careers and we have a podcast, so we're just looking for things that kind of run themselves. An index fund, you find a good index, you might get anywhere from 1.8 to 5% dividends.
Mm-hmm.
Okay. And then typically the ones with the lower dividends have more growth potential. So, over time you invest in an index fund, you get anywhere between 8 to 12% year on year increase in value, and that's where the value comes in with index funds. Because we recommend, hey, don't put all your money in a money market account. Just your emergency fund, that's pretty much it. And then the rest of your cash, I say put in the index fund. Wouldn't you agree?
Yeah, I agree with that. Also some other people might take a high yielding bond account or a bond index fund, and they'll probably get somewhere between 6 to 7% dividend return. So I mean that's also another thing, but it's very risky, and I advise against high yielding bond index funds. But that's another approach to make some money. Also, like you were saying, you have Broadcom, which gives you a pretty good return on your dividend play as well. And the more money you have, the more you definitely get off of that. But as far as the index fund, it's definitely something that's less risky because you don't have to go attend to a tenant or have the maintenance fees or some type of renovation costs. Something happens, breaks down, electrical. So it's a little less risky when it comes to that.
Yeah, I mean, for sure. I mean, so some pros with an index fund is less maintenance.
Mm.
I mean, basically, you can even have a auto trader account where you just invest the same amount into the same index fund month over month. You don't even have to think about it. And research shows the people who make the most money in the stock market are the people who forget they even have the accounts. So, you'll make a lot of money and you'll basically not have to do much. But the downside is, right, if you're relying on dividends because you do want the extra source of cash, taxes are going to be higher because dividends, you have to pay, regular federal income tax on that versus a rental property. There are so many tax reductions like depreciation. You can deduct what you're paying in interest. You can deduct what you're paying in management fees, maintenance fees. It's just a lot more tax advantages with a rental property. Then, of course, and another downside is if you need cash on your index fund, of course, right? You could borrow on a margin, but then you're at mercy of the market fluctuating up and down. Where you need, in case you need to take out like a home line of credit, home equity line of credit on your rental property, you're not exposed to any kind of market. Even if the value of your home goes down, you still have to pay back the same amount of money that you borrowed against your home. So So there are some cons with index funds, but again, the pro is the stability, whereas a rental income property, your renters could not pay tax. You can have an unfortunate event where, a natural disaster wipes out your home. If you have insurance, you'll get the money for your home, but you're going to go months, probably even up to a year, where you're not making any rental income on that property because it's being reconstructed. Of course, that is geographically dependent. Also, it just takes a lot of time. Especially in the beginning, you don't have a management firm managing it. It's going to be a lot. It's juggling that with work. It might be even discouraging, But what I recommend personally, I say do both.
Yeah, I agree with that. I'm personally doing both. I'm heavily invested in the stock market, definitely doing my dollar cost averaging every 2 weeks. And I own a couple rental properties in Houston and in Dallas as well. It's just something that builds your net worth. And if you don't play, you don't get paid. So that's what I say.
Yeah, and I think that's the key takeaway. Which is better, index funds, rental properties? In my opinion, they're about even.
Yeah. Yeah, you made a good point about the HELOC. You could always reuse that line of credit, and then you could use that line of credit to, go purchase more properties or renovate your own personal home or do whatever you want with that. And once you pay that back, you could reuse it. It's a great tool. Honestly, I'm going to say rental property is better than investing in the stock market. It's
oh my God! Ooh, okay.
That's what I'm going to say. It's more lucrative.
It is more lucrative,
right.
But that doesn't necessarily mean it's better.
Okay, but I feel like it's
depends on your market. Depends person to person.
Yeah, it's a quicker way to build your net worth when you have rental properties and you own real estate. So I'm gonna go with that.
But that's okay. So you're saying buying rental property cash?
Not necessarily. I try to buy the rental properties cash if I can, but like I said, I try to reach those areas where it's a low income area where you can find something for a good $60,000 to $70,000, pay that off pretty quickly, get a family in there. You can even use a public housing authority,
yes,
where they pay a good portion of it. Maybe it's like 80%.
80%.
Yeah, and the family pays 20%. So that you're going to get that money every month.
Well, I guess what I'm saying is you said it's a faster way to build your net worth.
Yeah.
I'm going to push back if you have to use a loan to do it. Because a lot of people get loans to do it, 30-year loans. So you're going to have that negative taken away from whatever the home is worth that whole time. Versus if you're investing in index funds, you're worth 100% of what's in your index fund.
Okay.
So if you have a house that's worth, let's say by the time it's all said and done, you renovate it, it's worth $100,000.
Yeah.
Then you're making, 8 to 10% a year. Then you take out taxes, everything on the 8 to 10%. Maybe you walk away with 3 or 4%.
Yeah, or you could use the HELOC method, right? Where you take that line of credit
and buy another house. But then you have the debt on top of debt on top of debt.
Well, yeah. It could get a little risky.
My index fund account, I am worth 100% of what's in it.
Okay.
So that's why I'm going to push back a little bit on that. But now if you're buying it all cash, everything cash, then sure. But in the end, more or less, can you agree it's similar?
Yeah, it's similar.
And could you agree the best thing to do is to do something?
The best thing to do is to do something. Yes, sir.
Pick one. Index, real estate, or do both.
Yeah.
Hey, I'm all for it. All for any kind of investing. We have videos talking about both of these things that you can check out. But since we're talking about